Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Messer and Tim Stenivek from Bloomberg Radio.
Tracking it all for us and really setting us up this week ahead of Kamala Harris's speech, where she addressed the economy and started to get into some specifics. Bloomberg News White House correspondent Josh Wingrove. He's joining us from D.C. So, Josh, you did write, I feel like, the story that set us up so well about what Harris would mean for business and the economy. How did what we hear kind of match up with expectation? You said it would be kitchen table issues. It was.
Yeah, and she's really focused on sort of expanding stuff that they were already doing or that the Biden-Harris, budget had proposed, as opposed to sort of, totally pulling new stuff out of thin air. Today had a focus on expanding the child tax credit, help on housing, both on the supply side and with subsidies for first-time buyers of $25,000. I should note, they've not put a dollar figure fiscal forecast on any of this. Some outside estimates are already coming in, including the Committee for a Responsible Budget, saying this would cost about $1.7 trillion over 10 years or so. So big numbers that she's rolling out, but it's an election and people, are punch drunk and we're throwing ideas at the wall. I guess that's the vibe right now. But definitely focused on sort of like this question of trying to sort of build what she called an opportunity economy. So that really is sort of setting her lens on things. She thinks that too few people can get ahead, and that's her starting point.
And she did make it clear that in the weeks ahead, that's when she's going to start rolling out more specifics. But which particular issues do you think she will have more specificity on versus which ones do you think she's going to be forced to have to be a little bit more broad with so that she doesn't have to walk back certain issues?
Well, I think we'll be looking on the housing stuff for more detail on that. The other governments in the past set targets of building X amount of homes. She said 3 million new units. It often struggles to get there for all kinds of reasons, including that the federal government doesn't typically build homes itself. So we'll be looking for more, I guess, on that. She has other policy that we expect her to roll out too. She hasn't said a lot about other subjects like, hasn't talked about the Fed, for instance, so I wouldn't expect her to, but, she hasn't talked about the Supreme Court. She hasn't talked about a lot of things that she would want to call for, but we're in this sort of blitz zone right now of really quickly trying to sort out what policies she can add in, a few weeks, really, because normally after Labor Day, you don't add a lot of stuff to the sort of, display case. You just sort of like sprint to the election time. So she's right now just trying to get her own spin on things, a couple of staff changes, a couple of re-emphasis, but not overthrowing the whole apple cart.
Yeah, it's kind of the cliff notes of a race to the White House or, coming up with your plans. Having said that, Joe Matthew mentioned earlier of Balance of Power, one of the co-hosts, said what jumped out for him was her talking about Kamala Harris, talking about the first federal ban on price gouging on food. Yeah. So that's an interesting one, although we've talked about this, right? And this is a difficult one maybe to implement and do.
Great example of something that does not have a lot of detail on it. She's also said that they would set clear rules of the road, but literally won't say what those are. This is a rhetorical argument right now, and that's fine in politics, but it is at least unclear what she means when she says she's going to change or firm up rules of the road for companies, particularly grocers and people in that space. One takeaway from her speech, though, today is she seems riled up about middlemen, for lack of a better phrase. She talked about it in the context of healthcare. So we could be seeing sort of a enforcement pursuit of some sort of, places where you have market consolidation, the Biden administration already going after meat packers, where they can make an argument that they think companies are essentially colluding through, a single or small number of firms to drive prices up. But, the other thing about this is it's a high wire act. Republicans, I'm sure, we're screaming at the television saying, oh yeah, grocery prices are high. Who's responsible for that? And of course, no one person is responsible for that, but Harris is both campaigning against the status quo as the sitting vice president. And so far polls show that people are kind of okay with her doing that, or at least it's not blowing up in her face. And that's an interesting dynamic here as well. So she's, saying, isn't it wild how house prices and house affordability is such a big issue and grocery affordability is such a big issue? That's normally what you hear from someone running to unseat the incumbent, not the incumbent vice president running for the presidency.
When it comes to some of these top initiatives, how much of it really depends on where Congress stands, if you have a split Congress or if you do have more unanimous decisions there?
I mean, all of this, like so much of what she has announced today is essentially money stuff that will come down to Congress. Now, there are signs that Democrats are feeling a little more bullish, at least in the House. The Senate remains a pretty tough slog. It looks like it'll more or less come down to Montana, which is a pretty red state with a Democratic incumbent trying to hold on there. That could swing things. But it'll really come down to, how these elections come out in all three chambers, or all three, buckets. And then from there, they'll have to figure out what they want to do in 2025 when so many of the individual provisions of the Trump tax cuts expire. So everyone who gets elected and takes office in 2025 needs to decide, do you do nothing and let everyone's taxes go up and we all get blamed for it? That's really unlikely, regardless of whether it's Republicans or Democrats in control of any one thing. And so everyone thinks there's going to be some kind of a deal on taxes of some kind in 2025. And so what Harris is saying is, here's my starting position. Child tax credit, big budget item. Subsidies for first-time home buyers and first-generation home buyers, which existing Biden, calls have already called for subsidies like that, and so forth. But right now, she's really trying to sort of set these banners of what her starting position in talks will be. Do not go and buy a house right now because you think you'll have $25,000 from the federal government. You won't. It's not ready quite yet.
Hey, listen, bottom line, just got about 30, 40 seconds here, Josh. I mean, you cover the White House. How much of what she says on the campaign trail, does she kind of like bounce it off the folks in the White House just to make sure we don't ruffle any feathers? Or what's that balance? Or is there none? She can do kind of what she wants to.
I think she's gradually moving into firm hands in the reins mode, but neither Kamala Harris nor Joe Biden have any interest in this exploding into a fight. We're going to see a show of unity in Chicago next week at the DNC, and it helps that a lot of what she's proposing is stuff that really draws heavily on what Biden believes. He picked her for a reason. They are aligned on a lot of these things. She's putting different emphasis on it, but right now they're singing from the same song sheet.
All right, well, looking forward to all of you and the team's coverage. Josh, thank you so much. Josh Wingrove, he's Bloomberg News White House correspondent, joining us there in D.C.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
A story about one of the key states in the U.S. presidential race, and that, Jess, is the swing state of Michigan.
It is, and so crucial, and a must-read story here, and a must-win state when it does come to Michigan, when you're thinking about the battleground states here, and its angst over inflation and EVs and so much more, and why it matters so much on who wins the White House, and of course, who controls Congress, Carol.
Yeah, the story and the reporting done by Bloomberg News Congressional reporter Erik Wasson. He joins us right now on the phone from Capitol Hill. Erik, so good to have you here with us. This state, how important is it, and why might it be more important than maybe some of the other swing states?
It's really important because we have a Senate race, an open Senate seat. Debbie Stabenow, the longtime Michigan Democrat, is retiring. So that's an open seat, a chance for Republicans to have the first Republican senator from Michigan in decades. There's two really, that Slotkin moving up from the House opens up her very toss-up 7th district. And then Dan Kildee, who's been the longtime Democratic representative of the Flint area, also retiring. So there's an opportunity for Republicans there. Democrats have to win all three of those races to get the House and Senate. And obviously, the blue wall, Michigan, is very crucial for Kamala Harris. And, I put 900 miles on the car, drove all over the state. And what I hear from voters, they're very sophisticated. They're very tuned into the needs of the auto industry. They're skeptical of Biden's push into EVs. They don't really use them much themselves. Only 24% of Michiganders have any interest in buying an EV. And they're skeptical that others will as well. They're worried that Biden's pushing GM and Ford and Stellantis into bankruptcy. And they're very worried that, even if EVs do catch on, that there's fewer union jobs. There's just, 40% fewer parts in an EV. So there's a real debate going on. And there's related industries. I went and found this restaurant, Tony M's, right near the GM plant, where the owner, she supports the UAW, has strikers out front, but she might vote for Trump because her food prices are so high, she might have to lay off some of her 25 employees.
Well, she said, I love the quote that you say, things are different now. When GM got rid of their third shift, our business dropped. They used to be busy, right? They were open at 7 in the morning and kept the lights on until 2 a.m. It's not the case anymore, Erik.
Right. They had a morning shift when people came off the night assembly and did had a happy hour. But she said if GM does go and there's talk of expanding production again due to this EV conversion, she will reopen in the morning. So but she's a little worried that that's actually going to happen. There's been rumors of that. But an amazing woman. She talked about how just went through all of her different prices, but she loves to do helium balloons for the kids. That used to be $175 a tank of helium. Now it's $478. She's really getting crushed here, and she wants to keep this family business going. But we heard that from a lot of people. I talked to the person who did a lot of the tile work in the New Detroit airport. She has commercial contracts falling through to the insurance rates, and people just really want to hear economic policies. And I think we're seeing Harris today do that. Certainly, Alyssa Slotkin told me she doesn't want to hear anybody talking about how great the economy is and citing statistics. The people she talks to wants to hear real solutions, especially on those grocery and gas prices. And they're trying to come up with something.
Hey, Erik, one thing I want to ask you. I love that you spent, put a lot of miles on your car. Sorry about that, but that's a lot. But when you walked away, I remember being in Detroit years ago, and I think my luggage got lost. I had to buy some clothes. Everything was like going out of business. There were stores closed. It was really depressing. When you rode around, is it very depressing? Like, how would you describe it?
It depends. Detroit certainly has its areas that are, the downtown is reviving. There is, this bit of a miracle here, Michigan Central Station, et cetera. There are vast areas of rundown housing that have been cleared out. It's almost like gone back to nature where they've just removed the housing and let it go back. I went to Saginaw, which is, this is where Nexteer and other major components of the auto industry that make the steering had these huge plants. And this area used to have 80,000 GM workers. Now it has 8,000. And there's a crime wave. There's an internal, sort of a rundown feeling in the center of town. But then you go a little bit outside of that, and there's a bit of more of a thriving area where they have chips related investment that they're excited about, semiconductors. So I think Michigan could go either way. There's a real feeling and pride among the people, even if they're not directly in the major manufacturing industries, but they're in related industries, that this state really has a skilled workforce and could be brought back. But they want to see, and they're really debating over the best way to do that. And, I think the candidates are really trying to acknowledge that. They're not, Harris is no longer talking about who's weird, but she's coming up with these ideas. And you can debate whether price gouging legislation will actually be effective. But Slotkin certainly talks about negotiating drug prices, and we've seen some ability to lower
you mentioned
prices.
Slotkin, the Michigan congresswoman. I love the quote in the story. If I hear one more Washington-based, Harvard-educated person tell me that, no, it's really better and the economy is actually very good, I'm going to have to maybe depart that meeting. I mean, this is what we talk about a lot, right? There's the big, broad economic statistics we talk about. We look at the market. We look at, what's going on in the labor market, even though signs are slowing. But when you get down on the ground, it's often a very different story. And this is something that many would say, political strategists, that the candidates have to be looking at.
Yeah, and I think so. One person quoted in the story is Stacey Washington. She was volunteering for Rivet, Kirsten McDonald Rivet, who's trying to replace Dan Kildee, making phone calls because her issue is gun violence. Her daughter was murdered 2 years ago. She's very interested in controlling guns. But I asked her, are you going to vote for Trump or Harris? I thought she would be a lock for Harris. She says, no, Harris has to prove herself. I might vote for Trump. My personal economics were better under Trump. So this is how people are voting. They're voting their pocketbook. And, all the way down the ballot, we talked to Hertel and Rivet, they really don't want to pretend like the economy is great.
Right. Erik, you're talking about the economy too. What about the state when it comes to Michigan specifically? Because we talk so much about Detroit, obviously automakers here, but what other key issues and industries really matter here? Because you also mentioned chips earlier.
Yeah, no, I think the chip industry, and one of the things we've seen is battery plants go in for the EVs. There's an Ultimum plant, a joint venture with South Korea going into the Lansing area, 1,700 jobs that Democrats are running on. But then there's a separate one by Goshen, which is a Chinese-backed, that Republicans are on the attack over. And in fact, the local town council tried to block the land for that. It's a really heated battle over whether you're going to, allow the Chinese in, real battle over critical minerals for that industry. So I think, it's not just EVs, but it's the related, the battery technology, the chips, just trying to really center and build out from the historic auto industry and revive it. But I think, everyone talks about costs. And I think, it's interesting. The gas prices are actually higher when I drove around Michigan than I see here on the East Coast.
Yeah.
It was close to $4 a gallon most places. And, there's various reasons for that. But I think they're not really embracing the EVs because culturally, most Michiganders, if they had a little bit of money, they have a fishing hut way up north in the state. They drive every weekend 4 hours. They don't see the charging stations. They don't see the infrastructure.
Yeah.
There's some potential new solutions. Stellantis is building a Ram Charger with a small gas engine to supplement range. Until they can address the range anxiety, Michiganders are not embracing EVs.
Hey, before you go, one thing I want to ask you, since you did drive around, you had these conversations, you got a feel. Do you feel like there are many Michigan voters that just haven't made up their mind yet, and maybe the debates will be important, maybe some of the specificity we get on either Kamala Harris's or Donald Trump's, programs, what it means for the economy, that could sway them? Are a lot of them still undecided?
Yeah,
and just
absolutely.
got about 30, 40 seconds here.
Especially in that Lansing and Flint area. The other thing that is going to matter for Democrats is turnout in Detroit. Gaza is a big issue. If there's a Gaza ceasefire this weekend, that will help Democrats. Arab Americans make up a big population in Detroit, and they may stay home. So those are the big factors in Michigan, those two.
It's just fascinating, right? But love it when we can get really a good picture into what's going on in the ground in a state that's going to be so important come the November outcome. Erik, thank you so much. Erik Wasson, he's congressional reporter at Bloomberg News, joining us there.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Friday brought another batch of economic reports. In fact, they were kind of mixed readings on the U.S. economy. We had U.S. consumer sentiment rising in early August for the first time in 5 months on more optimistic expectations about their finances as inflation steadied. The caveat, though, this is interesting. The rise in sentiment was partially driven by political reasons after President Joe Biden's decision not to seek re-election. So we had that going on. We also had new home construction sinking to the lowest since the aftermath of the pandemic. So hence the yin-yang, if you will, of the U.S. economy. Let's get into it and let's get some sense of what it really means about the U.S. economic backdrop. With us is Bloomberg News economics editor Molly Smith, joining us from New York City. Molly, good to see you. Good to be talking with you. Should we be conflicted a little bit over this data?
They're measuring two different things here, Carol. I mean, we've been seeing home construction come down for several months now, particularly for single family construction, and it's to be expected. Builders had been working really hard to ramp up inventory. Inventory is now, of new homes, is the highest level since 2008, but homes are so unaffordable that people aren't buying them. So it's only natural that you would start to see builders scale that pace back until mortgage rates come down, prices hopefully come down, and people can start buying homes again. The Michigan data, like you said, really reflecting right now just that boost from Democrats and seeing Kamala Harris step into the race in place of Joe Biden. Interestingly, though, from the Michigan report, worst conditions for buying a home ever. And this is in data back to the 1970s, I believe. So that metric has been pretty weak in the Michigan survey for a while, but this hit a record low in early August.
As you know, Molly, on the back of those consumer price as well as producer price readings that we saw earlier this week that still showed that inflation was contained. And then, of course, stronger than expected retail sales data. How do you fit in when it comes to the sentiment data as well as the housing data into the Fed's thinking, especially because we're going to hear from Fed Chair Jerome Powell at Jackson Hole in a week from now?
Right. I think, all of this is still painting the picture of a gradually moderating economy, and especially, in light of the jobs data that really freaked a lot of people out 2 weeks ago, that, we're getting some data now this week that showed, okay, like maybe that was a bit overdone. We've seen people scale back their bets on the 50 basis point cut expectations for September. It's looking more like we're back in the 25 vicinity now. The data right now is just not showing that the economy is falling off a cliff. It's showing that inflation is moderating, that other parts of the economy are moderating, but that consumers are still spending money. And that's, again, what you would want to see if you're going to have a soft landing of the economy. It's, of course, great to see that sentiment has picked up, but the level's still pretty depressed compared to it was before the pandemic. And We also know that sentiment historically is not necessarily the best predictor of spending. So take that for what you will.
Well, right. This is why I kidded yesterday, Molly, that Jay Powell is like breaking out his 150-year-old cognac, around the fireplace, because he's got to feel pretty good. This wasn't an easy thing to navigate out of. Having said that, right next stop is Jackson Hole. So does he have a delegate thread to a needle to thread rather next week, or is he in a pretty good case in terms of not maybe having to say much next week?
I think it's always, delicate when Jay Powell is speaking. We know that really anything he can say can move a lot of money in not a lot of time. So I think he certainly doesn't take that responsibility lightly. I think that will be really the key thing for everybody to look out for now going forward is going to be what the August data show, particularly for the jobs market. Are we going to see, some of that weakness faded away? And also for inflation, is it still moving kind of sideways, kind of down at the moment? We did, at least on the jobs report, though, get state level data today. And that was helpful in seeing, a lot of people are wondering how much of a role did Hurricane Beryl play in the weakness? And was it really all coming from Texas? And we got state level data today confirming that it was not the case, like the BLS had initially said 2 weeks ago. So that was good to see that, one, it's not Beryl, but then two, it's like, it kind of showing the rest of the labor market is broadly weakening.
Walk us through the Fed speakers that we did hear from this week, like Austin Goolsbee, also Raphael Bostic, who they had a couple different points there, but they were pointing at different weaknesses that they were seeing within the economy right now.
And I was going to say, Austin Goolsbee specifically, president of the Fed Bank of Chicago, talked about the weakness in the labor market, right? He was pointing to that because it does feel like that narrative, that Fed narrative about their focus on housing and weakness is definitely there.
I think all Fed speakers right now are rightfully focused on the weakness in the labor market. And that's really what, Powell has said as well, is where the committee is turning its attention to, that when you have a dual mandate of, on the one side, ensuring maximum employment, and on the second side, promoting price stability. When prices are looking a lot more stable, you have to turn to employment. And that's what they're all doing right now. And the employment data has definitely been softer, but I think they're all very quick to point out that they don't want to overreact to one piece of data and that 1 month does not make a trend. So it's really right now, I think, just about, maybe calming down the jitters that the markets have just been very on edge lately, and knowing that I don't think they want to introduce any new thoughts right now that are going to tip the narrative, especially ahead of Jackson Hole.
Hey, kiddo, really quick before we let you go. Next week, Jackson Hole, obviously front and center, what Jay Powell says in his Friday speech, but we also do get another weekly job list. We get Fed minutes. We also get new home sales, existing home sales. So another read on the housing market. Anything that you think investors should keep an eye on, just quickly?
Yeah, those are the big ones right there. I think Jackson Hole is going to be by far probably the biggest potential market moving event of the week. But, jobless claims have gotten a lot of attention too now as we're really looking at that labor market mandate.
Right, and more kind of more current data, right?
Totally,
in terms of getting a read on it, which is important.
Yes.
Have a great weekend. So glad we could check in with you. Bloomberg News economics editor Molly Smith.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's stay a little bit with this morning's weaker housing report. And to someone who really understands the housing market so well, Kate Kaminski is the chief operating officer of the privately owned asset and real estate investment company, Walton Global. They've got nearly $4.4 billion of land under management, over 90,000 acres under management across the U.S., also in Canada. She joins us once again from Scottsdale, Arizona. They operate, by the way, in the retail, industrial, and commercial sectors as well. Kate, good to have you back with us. How are you?
Doing great. Always great to be on.
Well, it's great to have you back with us. Your read on the weaker housing data that we got today, are Molly Smith just breaking it down in terms of home builders? They built, inventory's up, now they're holding back. But what's your read on it? How do you kind of square it with the data point versus what you are seeing specifically?
Yeah, I think we were all anticipating that this was going to occur. We saw 6.8% down month over month. And that was largely driven by the single family sector, which is down about 14%. We're out there working with 14 of your top 20 public builders, and the long-term outlook continues to be strong and bullish with all of them. And so, like with the jobs data and other things that we've seen, I think that the market is really in a wait and see mentality right now. You've got the market, pricing in Fed rate cuts, about 3 of them probably this year. Is it going to be 50 basis points or 25 at the next meeting? That is to be determined. But at the same time, your consumers out there are very fickle, and they're responding to this uncertainty. And why would I get into a mortgage today when there could be reductions in the future? So, we remain very optimistic in terms of the outlook, not just for 2024, but for the next several years in the new home sector.
And I have to bring up, because you're talking about those rate expectations, when you do have swaps traders paring back those expectations, for instance, like in September, they're only expecting about 25 basis point cut there from the Federal Reserve. How measured of a approach? Because if it isn't as aggressive, what does that do for sentiment, and how long does it take for people to wait until they could potentially have better deals in the housing market?
Well, I think that, of course, that's going to have an impact, but we need to take a step back and look at, what is really fueling this sector today. And it's definitely new home building as compared to resale. We've talked about the lock-in effect before that we're seeing for anybody that's in existing homes, not wanting to get out of those low rate mortgages. But your builders are continuing to really push incentives. It increased in August to 64% of builders are still offering incentives. And 33% of builders offered price cuts month over month. And so they're really working to get these home buyers into homes in order to continue to drive their market share.
You said you're optimistic, home builders are optimistic, and it's not just this year, but next year. Why is that? Is that the expectation that the rate environment eases? What is it? Is it demand? What specifically?
Your underlying market fundamentals are not changing. We saw last year the largest population increase in the U.S. in history. Migration is at all-time highs, and you've got these younger generations, the millennials, a little bit later, but moving into household formation years, the largest population that we've seen, and they too need a place to live. And so, when we say we're bullish, it's because really where everybody seems to be pretty comfortable is around 5.5% for mortgage rates. And when you have your builders out there who are offering these incentives to get them locked in at those rates or lower, I think they're going to see strong performance. And where Walton focuses is in the land space. So we're not developers specifically. Sorry, what was that?
No. And go there, because it's one of the reasons we love talking with you. When we talk about home building, it's first of all, it's land acquisition, right? It's, what you have to deal with in local markets, and getting all, the approvals, if you will. So talk to us about where you've been buying and how much buying, and how we last, I think, talked with you back in April, like how that has shifted in the last few months. Or how it compares.
We're still focusing on that southern smile of the United States, but continue to focus on those markets who are pro-growth, pro-development, and as I've talked to you about before, areas where we're confident we're going to be able to get approvals, and where they're going to have funds available to finance infrastructure. Texas, Florida, so many states really have great programs in place. And your builders continue to drive land banking strategies, off-balance sheet financing strategies, so that they're putting their capital to use in the most effective manner. Their amount of contracts that are under option as compared to outright purchases are the exact inverse to where they were a year ago. 60-70% of deals under option, and they're sitting on a lot of cash. Horton has $3 billion in cash. Their investment grade rating just got upgraded to A- because they have really strong internal fiscal policy.
I have to ask, since I am a millennial and I do have an apartment in Manhattan, but I do not own a home. So you were talking about that Southern smile in the South. But what about when it comes to those more expensive corners in the U.S. and what you're seeing there as far as the biggest obstacles, which obviously the obvious ones are the price points there?
Yeah. Well, we actually feel that this cooling that's currently happening is needed, not just so that the Fed actually responds and starts to bring rates down, but also we need home price appreciation to cool off a bit as well. My builder colleagues might not appreciate that comment, but we need to ensure that affordability gets in check. And so this current little pullback, and I do believe it is just a short pullback, is necessary to control that. The Northeast actually saw great numbers, not so much in the single family space, but multifamily is booming there, townhomes, condos. And so, that demand, as I said, continues to be there. And we're seeing some tempering, hopefully, in that pricing.
Talk to us, too, about the investor money that comes in. You guys have global investors. Where's it coming from? What kind of money is coming in that, is giving you even more to put to work? Just trying to get an idea of the investor psyche here.
So the United States continues to be a place that I think on a global basis, investors, are very confident in the underlying market fundamentals and in our policy here, as compared to other places where this industry may not be as regulated. We've seen complete shifts from the way things, used to be with lending standards, et cetera, to where they are today, where everyone is quite confident that if we do see a recession in the future, it's certainly not going to be like the one that we all remember still in this industry from back in 2008, which was really focused on the housing market. And so foreign capital continues to be abundant in terms of wanting to place it into U.S. real assets. And so we have a heavy focus on the Middle East, Asia, and as well as right here in our back door, the United States. There's a lot of market volatility. We all saw it last week. Real estate, it tends to be a little bit more slow and steady.
All right. Great stuff as always. Kate, so glad we could check in with you. So appropriate on this day when we're focused so much on the home builders and the housing market. Kate, have a great weekend. Kate Kaminski, she is the Chief Operating Officer of the privately owned asset and real estate investment company Walton Global, joining us there from Scottsdale, Arizona.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So among our most read stories on the Bloomberg is one about the Florida investor and individual who cashed in on the meme stock craze and now is JetBlue's third biggest shareholder. It's kind of what I call a wait what moment. So let's get to it. This individual, not a household name, just a guy trying to make a buck. And now he's tracking the likes of the well-known activist investor Carl Icahn. Those are the words of our next two guests. For the who, what, where, and why, let's get to Bloomberg News U.S. Airlines reporter in our Dallas bureau. We are talking about Mary Schlangenstein. And also with us is Crystal C. She's our deals reporter at Bloomberg News. She's also joining us remotely. Hey, guys. Great story, as we said, among the most read on the Bloomberg. Mary, who is this man who is now JetBlue's third biggest shareholder?
Well, he's a native of Moscow, came over from Russia when he was 15 years old with his mother and his sister. And he started selling computers and built some computer-related companies. Now he owns a big firm called HubX. He's a co-founder of HubX, which is kind of an electronics B2B marketing place that's online and it's global. And so he's made money there, but he's also made money off of GameStop. He had a big investment in GameStop where he made a lot of money, and he's used some of those proceeds to invest in JetBlue.
And Crystal, I want to bring you into this conversation as well. And so come in here and talk to us about Vladimir Galkin and what you know about him specifically.
Yeah, like Mary said, we know that he had a background in computers. Doesn't seem like he has operated an airline before. But what we know so far is that he has this very significant stake in JetBlue. Right now, it's showing more than 8%, and Carl Icahn has a 9.9% economic interest. So if you think about it, Icahn is a multi-billionaire. He has like 18 billion in net worth, and this little known guy is here. What we know, what is really interesting is he said he has had the fortune to follow some of the activist investors, just looking at what they do publicly and being able to just follow them and get into the stock as well. Not only is Carl Icahn one of the people he kind of like looked up to, the other one is Brian Cohen. When Marion mentioned GameStop, the really interesting thing is that he was actually the condo neighbor with Ryan Cohen at one point, and saw him on TV talking about GameStop, and that's how he got the idea that he should get into GameStop as well. So I think it's just a really fascinating story about maybe like Florida, actually. Maybe it's like a Miami story, like Florida man gets into JetBlue.
It is really fascinating. Mary, so what does it make Galkin, and what are his aspirations? Does he consider himself an activist investor? Does he want to own JetBlue? Like, what is he looking to do? Does he want a board seat? What does he want?
Well, he's met with the president of JetBlue and with JetBlue's CFO and said he discussed the company with them. He hasn't asked for a board seat yet. He didn't say that he would ask for one. He said he hopes to get his stake up to about 9.9% in JetBlue. He had some suggestions for the board that, like that they should own more of the company, be more invested in the company themselves. And the only other thing he's apparently asked for so far was an upgrade in his frequent flyer status to the premium category, and he got that.
Well, it's funny too that I wonder, what his ambitions are. I love this quote in the story. Although he's never discussed JetBlue with Icahn, Galkin says, "I've had good fortune following activist investors before. They really work out great." I mean, so there's been no conversation, Crystal, between Carl Icahn and Vladimir Galkin.
Yeah, that's what our reporting had told us, that he hasn't talked to Icahn or the Icahn representative on the JetBlue board about his investment. Like Mary said, he's spoken to some of the JetBlue management team. He hasn't asked for a board seat. So I would categorize him as not so much of an activist investor. Activist investors usually come in with a set of demands. Like they want the company to do these amount of things. And eventual goal is to obviously get some returns, pop the stock price. And I'm sure he has the ultimate aspiration here for capital gains, but it's not really the same playbook that we've seen with some of these activist titans like the Icahn of the world.
Mary, I'm looking at JetBlue shares. They're down almost 15% year to date. This is one that has definitely struggled since the pandemic. Is it likely that something dramatic is going to happen at this airline?
Well, they're trying to turn things around at the airline. If you remember, they had a lucrative partnership with American Airlines in the Northeast that got shut down by a federal court. And then their planned acquisition of Spirit Airlines, also got shut down by a federal court. And so their current CEO, Joanna Garrity, who came in February, she's trying to turn the airline around. She's brought back some former executives, and she said, hey, we're pulling back to kind of our roots, where we started and where we were first successful. And they've delayed $3 billion worth of aircraft CapEx until beyond 2030. So they're really trying to get their house back in order to where they can start making some profits and see their shares go back up.
I mean, how are you guys thinking about this individual? It's really fascinating. So often he's not a household name, but he's dealing in a world where it's certainly a well-known company. When we think about Carl Icahn and pull this in, I mean, Crystal, how are you thinking about this as you guys reported this out?
Yeah, I found it fascinating. I think Mary and I had great fun reporting on the story, especially just contrasting him, like you said, to some of these very well-known titans, because they tend to have a very established playbook. I think my gut tells me that when you have that big of a stake in any given company, you want to exert some sort of influence, even though he may not have asked for a board seat. It wouldn't be surprising that, JetBlue will take his words more seriously given his stake. He pointed out that other than, if you look at the board, if you strip out the two Icahn representatives, the board combined owns about 1.4% of the JetBlue share. So he's there making a point that more ownership makes him more aligned with the rest of the shareholders. So therefore, whatever he says should matter more. So yeah, anything could happen. It depends on what he asks for next.
Mary, I mean, how are you thinking about him, right? Like, this is somebody who, probably wouldn't have popped up on anybody's radar, your radar, if it wasn't for his positioning here. I mean, I am curious too, is he a long-term shareholder, or is he, could he, if he starts to see the stock pop up, does he get out? Like, what do we know?
Well, he did tell us that he plans to stay in the stock for at least 12 to 24 months. And then I guess he'll reevaluate where they're at that time and decide what he wants to do. But he didn't sound like he was in a, big hurry to get out of the stock. He, in fact, added to his position as late as the early part of this week. He was still adding shares. So I think as long as the stock remains depressed, he may invest more if he believes it's going to turn around and start to rise.
Do we know anything else that he owns? I mean, he really seems to be very an eclectic investor.
Yeah, he didn't really talk about his other holdings. We know he holds some other investments, but he didn't talk about those. He didn't want to talk about his net worth or how much he invested in GameStop or how much he made in GameStop. So he's holding back some of the information that he doesn't quite want to make public.
Really cool stuff. Hey, Crystal, come on back in here. So where do we know where Carl Icahn is on all of this in terms of JetBlue specifically?
So JetBlue, his representative has gained 2 seats in February, and there is at least a 1-year term. So he will be on the board. His representative will be on the board until at least next year. He's kind of capped out in his holding at 9.9%. Anything over that, with such a highly regulated industry, will require regulatory approval to get any more. I'm sure that they're working behind the scene with the company, but because there's a standstill agreement between the company and the Icahn representatives, we haven't really heard much from them. But it will be interesting if they stand for re-election next year, or whether the company put them up for re-election next year, or will they agitate again and say that a couple of the things, they've done a financing deal. Are they happy with that? Once that standstill expires, we'll definitely hear more from the Icahn group.
Hey, Mary, save 30 seconds for you. In terms of JetBlue, I mean, we just got through an earnings season, so we won't hear from them, at least on a quarterly basis, until the end of October. But what's on your radar when it comes to JetBlue specifically?
Well, they did just do a big financing deal this week when they raised money in part using their TrueBlue loyalty program as collateral. And I think what everybody's looking for is whether Joanna Garrity is going to be able to be successful. Is she going to be able to get this company turned around? They've had cost problems forever and have never seemed to really be able to successfully tackle their costs. So I think that's what everybody's looking for is Joanna going to be the one that's able to do it this time? Well, everybody's going to be watching. Hey, guys, thank you so much. Really fun story. And as we said, among the most read on the Bloomberg News, U.S. Airlines reporter, of course, Mary Schlangenstein, and Bloomberg News deals reporter Crystal C.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Minton and Carol Massar here in the Bloomberg Interactive Brokers studio. We have a little under 20 minutes left here until the closing bell, but the S&P 500 on pace to close out its best week of the year.
Who'd
here.
have thunk, right?
That's right. And what a tear, added close to about $3 trillion since that low in August. So who better to talk with than Mike Rohde, Senior Investment Director at American Century Investments here. It has about $250 billion in assets under management. Joining us from Kansas City here on Zoom. So thank you so much for coming in, and especially late on a Friday heading into the closing bell here. But as we're setting up and coming off of a week where we just had the latest reports when it comes to consumer prices, producer prices, obviously retail sales coming in stronger than expected ahead of course, hearing from the man himself, Fed Chair Jerome Powell, in a week from now at Jackson Hole. What's your thought process of the rebound where we're at and what's ahead coming as we're still in one of the weakest months of the year here, seasonality-wise, for U.S. stocks?
Yeah, thanks, Carol and Jess. It's been definitely no summer doldrums around here. If you look at July and August, it's been pretty crazy. But we've seen small caps kind of really outperform in July, give back once there was renewed concern that we were headed into a recession. And then if you look at the data points this week, they've been much better, more thought about a soft landing. And in that scenario, I think small caps are actually looking really attractive just given current valuation. They are dramatically underowned by institutional and retail investors. And then finally, you have fundamentals improving. So you have earnings growth to outpace large caps next year. So we're pretty positive on small caps.
It's interesting though, because even after that rally in July, from when you're looking at, say, the Russell 2000 versus what the S&P 500 was doing, actually some of the price basis wasn't quite as cheap as it had been in the end of June. So a lot of people were viewing it more as a trade rather than an investment here. How do you view that as more of an investment? Why do you like that, and why do you want to own it when it still struggles when it comes to a forward earnings perspective?
Yeah, so forward earnings are expected to be higher than that of large cap for next year. So if we do see acceleration in small, I think that'll be a huge catalyst. You also have the yield curve steepening, and that should also be a good fundamental catalyst going forward. And then finally, you look at reshoring. So that's a big driver for small cap companies. It's really, small caps are kind of a pure play on the U.S. economy. 80% of revenue comes from inside the United States. They're directly exposed to CapEx, and they're much more highly correlated with CapEx. And so I think when you're looking longer term, reshoring, I think, has the potential to drive earnings for small for the next 5 to 10 years.
Interesting. It's a little tricky, though, right? We're kind of at this juncture that if the economy keeps moving along, right, and we see the market and opportunities kind of broaden out, right, small caps have a chance to gain. However, if we start to see some slowdown in the economy, they're going to get hurt.
Yeah, they are. Small caps are higher risk. They're more economically sensitive. They're smaller businesses. But I think that a recession is largely priced in at these levels. So we've been talking about this recession for 4 years. American Century sees about a 30% chance of recession over the next 6 months. But I think it's largely reflected in valuation. The spread between large and small is the widest it's been in decades. So like we like to say, if we do head into a recession, how high is the window you're going to fall out of? And with small caps, it's not that high. And then historically, coming out of recession, halfway through recession, you get really spectacular returns coming out of small caps. So I think a lot of the bad news is already priced in.
And you think even if we get a recession coming out, it'll be good?
It'll be great. On average, you see about 40% type returns over the next 12 months, kind of coming off of the bottom of recession for small, twice that of large. And rate cuts will help small caps. There's a lot more interest rate sensitive companies and spread businesses in the small cap world. Look at banks, for example. That's an area where we have a contrarian position. Our small cap value team is pretty significantly overweight banks, which should really, really benefit from a steepening yield curve.
So on average, over 40% returns off the bottom for small caps, you say, coming out of recession. Interesting. Okay.
That's correct.
I have to ask, though, what do you think the catalyst is going to be? Obviously, people are going to point at, when it comes to recessionary concerns, the tightest monetary policy, restrictiveness in recent memory here. But you look at the latest Atlanta Fed GDP model for the current quarter, around 2%, was closer to 3%, but can be a little bit volatile here. So what's really going to push the economy into a recession from your firm's view?
Yeah, so again, we actually think we're going to have more of a soft landing. So we see 80% chance of economic slowing, which I think the jobs number just indicated that, yes, the economy is slowing, but within that, 50% is more of a soft landing and 30% is recession. So recession is not our base case right now. And again, if we do have recession, really hard to call, but I think small caps have already priced in a pretty bad outcome. And the other thing is, the biggest trade that we saw last year on the institutional side were big managers kind of chasing those large cap growth companies, the Magnificent Seven, because they were underweight and underperforming. And so I think what you'll see is earnings growth for those large tech companies starts to decelerate this year, and small caps start to accelerate. I think you're going to see a real shift in rotation into small caps.
Hey, Mike, you guys have $250 billion in assets under management. You see a lot of money coming in, coming out, the flows. Where is money going into right now? Where is it going out of?
Yeah, so I'd say we've seen continued flows into our large growth strategies, which have done really well versus the benchmark. But we also have seen flows in small caps. So one of the interesting things is, everyone should hopefully have some small cap allocation in your portfolio. Active management historically beats passive in small caps. And so we've continued to see inflows in our small cap strategies. I think if you look at our assets under management in small caps across the board, we have about 40 billion. That would make us like the fourth largest in the industry. So we've had a lot of success in small caps, and that's been during a period where the asset class has really been out of favor. So we'll see. But yeah, I'd say in terms of flows this year, it still has continued to be growth, but I think we're well positioned if and when that shifts to asset classes that haven't performed as well.
Is the flow that you're seeing in small caps unusual, or is it kind of the same kind of flows you see consistently since you guys have been doing this strategy for a long time and you've had a lot of money under management? Is there something unusual about it, that there's more than normal?
No, I wouldn't say so. So there was just stepping back, looking at the ETF shortly after the small cap run where small outperformed large by 10% in July. There was a real uptick in small cap inflows, like just into the ETF. That has tapered a bit recently. But in terms of our firm, yeah, we've had really strong flows across the board, just given our performance versus the benchmark.
All right, cool stuff. Have a great weekend. Mike, thank you so much. Mike Rode, he's Senior Investment Director at American Century Investments.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.